Okay, I guess we're live on YouTube now, yes. So good afternoon to all the YouTube viewers. We will start in 2 minutes. Let's get everybody on. UJ is coming up. That would be a good trade. Keep an eye on it. Euro going down some. Aussie going down some. Aussie already going down some. New Zealand set up for downside. At least one short-term trade down more for all of them. Pong already falls, so watch the Pong. It's at a good spot for turning. Keep your eyes in it. A little more downside probably, but that trade is over. That one already fell. Yeah. So we're going to do the majors today. Everybody's on. Let's go. Let's start. So dollar index. I'll start with the dollar index. Like I promised, if those of you who are on, if you can, after the webinar, probably 15, 20 minutes, and then we'll do a Q&A, and then I'll tell you a little about the course if you're interested. So those who are interested in the course could stay on. Those who are not could go. So let's start with the dollar index. We're still in this. I'll go with the higher time frames because, as we promised, we're going to do today, especially on only the majors, so you can have a good look at it, right? So right now we're in this pattern. If you look at, let me just get a drawing tool. What's wrong with this now, man? It was working all the time. Okay. We'll get it. Yep, finally we got it. So we're in an uptrend. On a bigger time frame, it's pretty much in an uptrend, right? No, we're going to do the majors. If we have time, then we'll go to any other things, right? So let's stick to what we plan to do. We got a correction here, and then we started moving up, right? So you can look at this as one piece. If you look at that as one piece of the impulse going up, then we are probably making a correction like this, right? So we've got one leg of that correction here. We could likely go back to the top. We might be able to come back to the low, and then we'll see whether we get a correction. So let's make an assumption that this is what it's doing, right? Pretty easy. This is not different. We are repeating this part of it, making a correction like that. So erasing this, you will take this part. Let's copy it. So we can copy that part. Not that they're going to make exactly that pattern. Remember, I'm not showing you an exact pattern they're going to make. I'm giving you an idea of what patterns they can make. So we'll pull this across here. And you can literally take it and push it there, right? You can see that you're probably going to come up here, come back there, and then go. So that is one possible thing they can do. And then you're going to start this uptrend. That's one possible thing, right? We don't know that for sure. But remember, this didn't go up in a straight line, right? You made move, you got pullback, you got pullbacks. So we're looking for pullbacks here. This is what we're getting here now. We're getting a corrective structure to continue to go up. So let's go in the daily and look at that corrective structure. So far, it's going good. You got an impulse. You got a little correction here. You move up. You might be in some kind of a correction here. So this correction as it stands could be a small running flat. But if that's a small running flat, that means they'll break the top and come back for the bigger correction. But if we're making the bigger correction as it stands right now, right, that means we should see this come back here and then go. Get something like this, actually. You know, maybe with a little more complicated B wave in there. So it's two things you're looking for. Either this is the correction we're going, or we are still in the consolidation, which means we can come more downside and then go. I don't see a reversal pattern as yet, right? We don't have anything to claim it's reversing it. It's just going sideways, basically. So as it stands right now, if we think we're going to come lower, we're in this, think of it as what traders, technical traders like to call ranging, because they don't look at the patterns. We look at what pattern is inside the range, because it's not always ranging, right? Sometimes you see pattern that goes a little more, not sideways, but more like this, or more like this. So you can't really say it's ranging. They tend to draw two lines and say it's ranging, because that's the easier way if you don't know how to read, wave structure. So you can look at this and say, this thing will likely come back here. We're going to look for it to come back to this level and most likely this level, right? So at this point, we will see whether from here, we're going to start the upside. So that is the pattern. If we're looking at this as already the smaller correction completed itself in this level here, right? Then this one would probably just do this and come back up. But you could still get a sell setup here and then look for a buy setup, which means you will get a lower degree consolidation here. So by all means, you're looking for a consolidation at that level. And then you go to the lower time frame to see, do we really have a consolidation, right? We don't. Right now, you can buy this, but it's not a complete pattern. So it will be, if it keeps going, you'll be looking for a running flat, and that's not a good one to buy into. So there's a good chance you'll be looking for more downside here, which means even though it looks like all the majors are going to go down now, what you could see is that they make one more impulse and then reverse. So longer term, you're still within a range, and we haven't left the range. So as long as we haven't left the range, and we don't have a complete pattern to left the range for the longer move. We have a complete pattern for a shorter move. So if they go up from here, the upside is going to be, I don't know, maybe 400 pips, and then they're going to start a bigger correction. If they go downwards and then go up, they'll come here. Then we will probably have about 1,000 pips more to the upside. A bigger move, maybe even a much bigger one than that. So you're watching this piece to see if you get a down move here today. Maybe today, maybe tomorrow. The down move would be a good one. That means now you're going to come back to this level. That'll be a good sell setup, and then you'll be looking for upside from there, right? So let's see if we have similar in the euro. Go back to the daily. Daily in the euro is very similar, right? So if you remember when that was going up, we were saying even if they're going to continue to go, they have to make a big correction in here, right? Which we don't see. If we look at it weekly on this, and our reading of how we read this is different from how everybody else read it. So there's a good chance that what you're looking at, there's a consolidation that might just bring this back to this level. Right? That's a possibility. It might even break the low. We would look at this as a possible expanding flat with a 1, 2, 3 structures inside, right? As a B wave. That is a very strong possibility. Now, we're not saying that's exactly what they're doing there, because if this ends, if this was the correction, and we end the structure here, and that's a problem with expanding flat or running flats. You will not know whether the structure ends until you get an impulse, a correction, and an impulse. And then we will say, okay, good, this is the end of the structure. As it stands now, you can look at that as the end of the structure. But because we know of these expanding patterns that makes it looks like the structures and then turn and come back for a new low, we're always aware that that possibility exists. So what you've got to do here, you've got to make a correction here, right? And making a correction there means you're looking for something like this, right? You're looking for something a little more big. This might be too small for the correction. You might have to go back up. You might have to come back down, and then you might have to go. Remember, you say same here, right? So first, we would like to see whether this comes back to this level, right? Are we going to come break this low or not? Because if dollar keeps going up to the top, then this one is going to come break the low. And then we will see the upside, which means dollar after that, the dollar index will be coming down. Remember, dollar index has one down and a little like this, right? We're here. And we think they can go up and then come back down and based on the bigger one. So in that case, we will be watching for this downside. And if you look at the daily, you're consolidating. So that's when you start to see this consolidation, you know you're likely going to get one more impulse, right? Because remember, we had one here. Pretty similar. Once you start to see this not breaking the top, you're looking for that one to come down, right? Same thing. We're not breaking anywhere. We're not breaking low. We're not breaking top. So we're just going like sideways. And based on this sideways, there's a good chance you're looking for one more up here. Maybe even one more down, one more up, and then come. From here, there is a possibility, a rare possibility that they could go down. Then we will relook at the structure to see, okay, which part of this we're going to take as like low and which part is a correction. So as of now, you're in a sideways move for downside. So short term inside of the sideways move, remember the big impulse is going to be downwards. Now we are looking not at the impulse, we're looking inside of the impulse, inside of the correction to see where would this go, right? And since we have 1, 2, 3, there's a good chance we are trying to go up, which started. So what you want to see here is some kind of a consolidation, maybe even a retest of the low. It doesn't really matter. Either it's going to retest the low and then turn suddenly, or you will get a consolidation here and then it's going to go for that trade. So you can watch for one out of those things and then you get this trade here, right? Same like, remember when this was going up, we said, right? If you remember when this was going up, sorry, 1 second. When this was going up, oh, what's wrong with this? When this was going up, I was saying, watch it to come break the top and then turn. Well, it didn't break the top, but it did turn and give you a flag for a sell. We wanted the flag to come and break this low, which is what they did, and now you're turning. So watch here, if you start to get some consolidation here, that's a good trade to retest this top before you go down. So this is a trade you should look for maybe this week, maybe next week. If it does come and drop below the low here, drop below this low, and then start to go back, that would be a good trade. Because from there, I don't think this correction is over for them to go down, right? So if we get a sell setup today, we take it. If this gives you a sell setup, which you don't have, that breakout is not a sell setup. You'll have to wait for a flag here. But if you get a flag and you get a sell, take it to retest the low and then the upside, right? Because you can get this trade. If they consolidate in here, which is what I would most likely we all would like to see them do, then we're going to be heading for this trade because that becomes a better trade. See? So as you can see, patterns work and they work really good. So watch this. Let's go to the pound now. We're going to do them from the daily come down, right? So we'll start from the daily. If you remember, all of you remember this one. This is going up, it is going up, and we're like, don't worry, this is just the first move. This is first the first impulse to the upside if we are going up. Until this stage, we thought that was a correction for one more down. When they made that big move, it didn't change what we thought, but it made a possibility that it could become a very slow, impulsive move. They do have that when it's pulsing slowly, it looks like a corrective structure, but it's actually an impulse to the upside, right? A big corrective impulse, we put it that way. Well, this impulse would be part of a bigger corrective structure. So it's not very sharp, and that is okay. Nothing is wrong with that. You can see that, right? So as it was going up here, remember we were looking for sells from this area here, right? And then this happened. Remember what I told you? If you're not in the sell, if you're not in the buy, don't worry about it. Look for the sell because this has to come back. It's not going to keep going like that. It has to come back. It has to make a correction here before it can go. See? You didn't need a crystal ball for that. You just need to understand how chart moves. I wasn't even telling you what that pattern would look like. I'm telling you it just has to come back because it always does that. If you look at any chart, you will see it. They do this, they go back, they do this, they go back, they do that, they go back, then they fall, right? So we're going up. We have to come back before we go, right? You're not going to go in a straight line. It doesn't work like that. So that was just common sense. That wasn't even, you don't even have to believe in anything. You just have to look at any charts and you can tell. Forget about wave analysis. You just have to look at the chart and you can tell it's going to do that, right? But if you do wave analysis, then your confidence in it coming back and how it's going to come back and from where it's going to come back increases. You're going to talk about that from a knowledge base, right? So we looked at this and we said, okay, it's coming down, great. Came back to a good area. So the question is now, is this enough of a correction for them to take off to the upside? Or are we going to see more of a sideways here before they go, right? And in this case, they could do it like this, which means they can stay a long time in that sideways. Or they could actually do it like they do sometimes here. It's pretty much sharper move. You do find more wave inside, right? Like you have a wave within there. But it's a much sharper one. And then they come down. These are very rare. You don't see that so often. You see them more of a very long. When they get it like that, I'm always thinking whether we've missed something in the chart. Because I thought at that point, if you see any of my charts, I really thought that after this one, we're going to make one more up and then come down. So we'll have a pattern like that. Well, turned out that was all the corrections. And it's not very common. It's rare that you see so small corrections, but it happens. So is this a small correction to go up? Just one sharp wave. Maybe we can look at it as a running flat in combination with this one and then go up. That is possible. And what you would be looking for is what the pattern starts to show you here. it's dying out, and then you're going to get an up move. Now, if you do get that up move, let's go to the 4 hour. So last week, you remember in the webinar on Sunday, I said, okay, watch it. They might come and tag this low, which is what you get a flag here. They come, they tag the low. We broke the low from here, actually. You can check that they came, they broke the low, right? So now what's next? This pattern is intact so far. We haven't broke out of it. So as of now, there's still that possibility for them to come back to the top and possible breaking out, which means we could get a bigger wave here, right? That's one option. Second option is this down move is not over as yet. We see signs that it's about to over, but sometimes you get a running flat in here, which is possible. We know of that possibility. And this is just becoming shorter impulse to the downside, which could happen before they go. They still have to make that correction if they're going to continue to go down. Or this is the end of it and we're going to turn to the upside. So you start looking for that upside move because one out of those two will happen, right? So this is a good point to start looking for it. Now, what if they break through this? Can they break through? Remember, the trend lines they're only to show me a pattern that I'm looking at. It's not a support. It's not that they can break through. It's, like they're not going to bounce off any of your trend line if you put it there, right? That's not what the chart does. We're just putting it to see whether this pattern is still valid. If they break through it, the pattern is no longer valid, which means we will be looking at this as a running flat. Now, why are we taking the options of two patterns there? Well, because those two patterns develop very similar. When you have a running flat, you'll get something like this, right? And you wouldn't know that's a running flat until you get the second, you get this, and then you continue to go. Then you can say, okay, good, this is a confirmed running flat. Because once they stay in that structure, you could be looking at impulse correction, impulse correction, impulse correction, dying out in this one, and then turn to the upside. Some kind of an ending diagonal structure is known in Elliott wave, right? That is a possibility too. So because of those two patterns looking very similar to each other, and both of them are within, normally in an expanding flat, you don't get this repeating, you get the expanding flat like this, and then you get this drop through. So you don't get a pattern like that form, but rarely they do make that pattern. Where this impulse, instead of going straight down, starts to pull back and do this, right? That is rare, but it happens. Most time, I would say 80% of the time, this actually goes back up, right? I can show you sometimes when it breaks, and I can show you some when it go back, but that's something you can do on your own. You need me to show you that, right? So is it going to break out? Well, when it breaks out, what you need to do is don't jump into it. You allow it to break out. Let it go, let it come probably 100 pips, and then you wait for this to happen. And you get this trade. It will, if it breaks this structure, they will pull back. And then you get that sell. That sell becomes a more confident sell now because you know, right? If they do that, we're going to go down. As it stands right here, if you jump in the trade at the bottom here, what is likely going to happen to you? So if you're in this trade, what you need to do is put that to profit, because if you jump in the trade here, what's going to happen to you? It might go 20, 30 pips and then start doing that. And it can do that so fast that you're going to be stopped out in the trade. And taking a trade at the bottom, taking a sell at the bottom of a big move like that is not the best idea, right? If you wanted to sell this, you should have sold it at the top here or anywhere along this line, but not here. Even at the top here was a good sell. Or this is not a bad sell, but you don't want to sell it at the bottom of the structure, right? Can it break out the structure? Well, let it break. That's the whole point. Let it break. Prove that it's not making that structure. Then you wait for the correction and then you do your trade, right? So you don't have to chase the candles and chase what it's doing. Wait for it to tell you. Right now, nothing to do here, but potentially you can see we're still in a big sideways move and you're looking for this one to go up, right? Possible. They're all in correction, so possible. And this one too, you can see this is correcting here. Same thing in the bigger picture here. This one in the bigger picture is a little more complicated. We still have to figure out how this last piece will count that wave count there, but this one was easy. We know 1, 2, 3. You got 1, you got 2, and this is all one piece. Same question, we're not sure what that whole thing is, whether this is the end of the structure or we still have the possibility for one more up, which means they can still go make one more up and then come back, right? And the whole structure then come back. That is a possibility. We're not, we're not leaving that possibility out. It's possible. But right now we're going down. And then the short term frame, as long as we're under the downtrend, as long as you're going down, you can see the consolidation here. That means we're going to go down. So we are in this consolidation. And I don't think this is a triangle. We have our reasons not to believe that is a triangle. So we're going to look for this possibility, whether this comes out here and then go, or whether they actually go from here as a contracting flat, right? I do think we might see some of this upside, We might see some of this. I don't think it's going to violently go up now. That possibility is not, we're not looking at that possibility. The only one that has that possibility is the pound, right? This will have more of a possibility of making a move up here and then come down. So the question is, are we going to make a triangle inside here as a B wave? Well, that is possible. If you're looking at a B wave triangle, that is possible. So if you're looking at a 1, 2, 3, 4, 5 for a triangle in here, the waves in here shows that that is possible, and then you can go out, right? You can go straight out of this and then come back. I don't see it as a contracting flat as yet, which means 1, 2, 3, and then go down. We don't see that, but you can, if you're going to look for a sell setup, or if you get a sell setup and you take it, we took the buy, we closed the trade already. All of you should have taken that buy this week. That was a good trade because we actually called that one. If you took it, you made some money there. And now you're looking for a sell setup. At least back to the trend line. If it breaks out, just move it into profit and leave it. Because if they break out of this structure, there's a good chance. If this comes and break out of the structure, you will be watching this low. Well, you'll be watching that low to see whether you're making a flat and then go up. Or if they're going to break through. That means if you're in a trade, you don't take it off. You just move it into profit, move your stops into profit and let it go. Right? That would be the whole point of it. So that you can go. Short term, a little downside right now. Long, well, medium term up, and then long term, we think it's going to be downside, or some more downside at least, because you're consolidating. Okay, let's go. New Zealand. New Zealand, we're still looking for upside, but on the shorter term, it looks like they will break the low. Finally, they didn't break this low. It looks like we're going to break that low. Now, we have 1, we have 2, we have 3. That could be a contracting flat because they didn't break the low. If it is a contracting flat, we will see this break the low. So taking this trade might be worth it, right? You'll have to just go to break even very fast. But we watch to see whether they're going to break this low. Because breaking that low means you're going to start. These up moves are still coming. Let me go to the daily and show you, right? Or even on the weekly, I can show you that. Those up moves are still coming, right? This is a similar pattern taken from another chart. See? And you got this move at this level. We're going to see this. Actually, this pattern is taken from a 4-hour chart. I don't think many of you right now will tell me which one we took it from. Let's see if anybody can make a wild guess where this pattern came from. It's from a 4-hour chart, not a daily, not a weekly. No. Okay, it's going to be tough for you guys to guess here. I'll show you. It's from the Euro-Oz. It's taken from the Euro-Oz. Because yes, Euro-Oz, because I was looking at the similarity of the Euro-Oz pattern that we see here, right? This very same pattern. See this one breaking the top slightly, the Euro-Oz broke the top slightly there, right? So if you look at it, you're getting that similar pattern there, right? If you pull this a little more here, right? You got this one, this is the correction before that, and then you made 1, 2, 3, and the Euro-Oz is already breaking that low, right? It already broke the low. So because I'm looking at this, I'm thinking maybe this structure also end here and this one is going to come down much more rather than go back up, right? There's a chance of that. So I'll leave this here. That's good. But let's look at a bigger structure, the weekly, right? So if you look at this one, you can see, you remember this. We made that structure. We made an impulse. And we're pretty much in a consolidation here. We're not making an impulse to the upside as yet. We made an impulse here. We started, either all of this is still in correction. We go back and break the top, then come down. I think that's unlikely. I think we may have started the downside, but I don't see this as all the correction. So I'm thinking this has to go back up somewhat here and then come down. So we're looking for some more upside here as well. Even though on the lower time frame, you might be going down. You see that sharp move there? I don't take that to be all the correction, right? So this means this here, this is making a correction here right now. It's either it's a lower degree correction for upside or they will break the low and then turn. Either is possible because you're getting a lot of divergence showing you a sign that it's about to turn too. So watch for this, break the low, and then we're going to watch for the upside, which means two things. When it starts to go up, 2 things you look for: break up the top or turning from somewhere there. But there is an up trade coming. Short term, if you want this short term sell, which might be the trade today, you'll have to be very careful. There's a short-term trade you can take here, this one, but it's only good. You either break one of those 2 lows or maybe this low, but then upside, right? Because I don't see this as the one going down totally, right? We don't have a complete pattern for that. Contracting flats are rare. I don't think that is one of them. So if you take the trade, you can just put it to break even. And if that is a contracting flat and you're wrong about it, well, then let it, and you're right about it, let it go. If you're wrong, you got a break even trade, right? So watch for this one here today. See where it goes, right? Let's go. US yen. I think we might get a buy setup here. Watch this. Remember when this made an up move? This is like they make that and then they go. We might be doing the same thing here and watch this go. But only this would be, if we don't break that low, this would be part of an impulse. Right? This looks very much like a correction. You don't want to miss this trade if it go because they're going to break the top. Now, can yen, Aussie, New Zealand, can yen go up while Aussie, New Zealand, and euro going up and pound is going up? Definitely. Then you want to look at all the yen pairs, right? If the yen is not going to go up, it's probably just going to break this top and then go down. So you still have a trade to the upside if you get it, right? If you get that trade, you still take it to the upside. Move your stops, stay with it. I don't see the downside in this because we haven't broken that top, and it's more likely even if they're going to go down, we will break that top before they turn. So I can see this happening even today. Maybe Asian time, tomorrow morning, Asian open, you get that spike up and then you start to see the downside, right? That would complete this pattern. So I'm hoping that we get this trade today and then we'll decide whether it's going to continue to go or whether they're going to turn to the downside. Because from there, we would have completed this pattern, right? We've completed this piece. So if they need to go down, they can go down from there, from that point, right? Making a bigger consolidation. If not, we still think this has more upside to retest this stuff, right? Either we are out of the consolidation or either we are making a bigger sideways movement here, right? Kind of like 1, 2, 3, come back to the low and then go. It still will be an up trade, right? You're still in a sideways move, like everything. The euro, the pound, the Aussie, the New Zealand, everything is in a sideways move. And that is good when everything is showing you sideways move because you get a sense of the direction they're going to go, right? So we want this one to come break this top. And then we're going to be looking for the downside, right? Because you would have 1, 2, 3 here like that. And then you have 1, 2, 3, come back to this level. And from this point, there's a likely chance you're going to be looking for yen as an up trade. So look for some more up here. If that happens, well, that is not today, but basically bigger structure, right? Look for some down here and then look for that to go up. Now, you may say, well, why is it good? Well, just go back and look at the charts. That's how they behave. You can come back and you don't have to, this chart doesn't have more, this is all. Okay, basically that's all we have, but I was going to show you one of this big pattern. Let's look at a chart that has the pattern. Come on. What's wrong with this here now? Good. Right, see? You got to move down. You get 1, 2, 3, and then you continue down, right? So we got to move up. You get 1, 2, 3, and then you can continue to go up, right? That's one option, right? There is a second option, but we're not going to work on the second option because that's more complicated for you guys and it's probably not going to happen. So we can work for this consolidation and then upside. So you're pretty much now in this B wave structure here, right? Which would be more like this one. And then you got this one, you have that one, you have this one, you got to get this one, right? And then you're going to get this one and this one, which means you have that one and you're going to get the other one. Right? So look at that possibility. This is the most likely possibility to happen, which they're showing us that the dollar index is doing the same thing. So you're looking for more upside here. Put it in the daily. And you're looking for more upside here, right? Is it going to go from now? You're just in this small consolidation here. Right now, you're in this little consolidation here. And if this breakout, let me go back to the yen I'm using with all the lines in it, this yen chart. Go back here, look for this trade. Take that out. Look for this trade to the upside. So this could happen today. This might even happen while we're in the webinar. I hope it happens after we leave so we can get in that trade. Right? That is a good trade you should be looking for today. CAD. CAD is easy, right? CAD is actually doing exactly what we want. So let's get some honesty. How many of you think Friday when this started to happen, like when this fall starts to happen, right? Remember I told you this thing is going to go back up, right? It doesn't matter what. And then this happened and a lot of traders, I actually got a few messages. Hey, you said the CAD is going to go up. Look how it's falling. I was like, no, it didn't fall anywhere. Look at the chart. It didn't go anywhere. And then it went up and it came back down. And then it went up and it came back. This happened after I close the webinar Sunday, right? And then everybody's like, what is he saying? It's going to go up. Look, it's going down, right? It's going down. What is that guy said? Sunday, I do a webinar, say it's going to go up, and then it dropped Monday morning, right? And everybody's like, what is it? Well, that is it. It's still there to go up. It's still coming up, right? You just have to know how to trade these charts. It's a little scary, right? When you see, hey, wow, it's going up. You didn't expect that to happen, right? And that's how it happens. They always happen like that. So there's a likely chance if it keeps going the way it's going, we're gonna not only stop here, but we're gonna break out and break this top. So yen looks upside. This looks upside, right? Watch the rest of the majors, see what they're doing. They're consolidating, some more down, and then these could happen pretty fast. So there was only one chart that actually complete that move we're looking at. We're looking at a short-term move for downside on the euro, the pound, the Aussie, the New Zealand. Short-term up for the yen, CAD, and we haven't done look at the Swiss yet. But the yen, the only one that actually dropped that might have completed that move is the pound, right? So far, only the pound moved for this morning. Nothing else came down that fast. So if pound is the only one that moved, right now, pound doesn't have to do anything. Pound could go into consolidation short-term. But if pound is going up slowly in the consolidation, but at the same time, CAD is going up, yen is going up, euro is coming down, Aussie is coming down, New Zealand is coming down. You want to go and trade all the pound pairs because they're all going to go in the opposite direction. The pound is going to stay sideways, and then they're all going to go up. You're going to watch pound Aus go up, pound New Zealand go up, pound CAD go up, right? Pound yen go up. If that is going to happen, the pound move and stop. Right? So if you look at pound Aus, just to show you why I'm telling you that, look at the pound Aus, right? See that pullback there? If you look at it in a 1 hour, it's a fast move up, see? So they moved, stopped. Now the Aussie is falling. Pound is doing nothing except going up back slightly. And what is happening? Aussie falling. Pound Aus could go right back up. And it could go back all the way back to this top. Watch this. We tag the low, but that doesn't mean anything. Tagging the low doesn't mean we can't do this and then go down, right? Is that possible? Watch for the trade setup here. See? So let me go back to what we're doing, just to show you, right, how you understand when one currency moves suddenly and stop, something is going on, right? Nothing happened in the UK, right? Absolutely nothing happened. I don't care what they say, nothing happened. People will wake up and go about their thing. You know, there wasn't a hurricane, there wasn't any catastrophe, there isn't a big damage to the economy, nothing really. You would wake up and you wouldn't even know that the pound had us. If you're not a Forex trader, you wouldn't know that you lost some value on your currency. You would go to shop normally not knowing you just lost some value on your currency, right? It wouldn't affect you. But basically, if you look at it, it's a good way of manipulating the market, dropping it and then move everything else against it, right? So everything all the crosses get to move, right? So watch that. Let's go back to, we were in the CAD. Let's look at the CAD big structure, right? We've got an impulse. We've got the correction. We've got another impulse. Looks like we're in another correction, right? So this one will have to come up to the top here as we decided, and then you can start to look for this trade down. Make sense? Now, can this continue to go up? It could if we see the structure changing, but we will have to wait for them to break this top. To confirm that, they would have to break this top, start to make a deeper pullback like this, breaking out of the structure, and then we're going to look for that. So if you get a sell setup from the top, take it. It's going to show you a good sell setup from the top, right? Take it. So let's see what this is going to do. Swiss. This one is pretty easy. This one is the easiest one to trade because this is going to likely break the low. Doesn't have to, remember they stopped there, right? So watch. I don't think that is the running flat. I think this might come one more down here and then go. So we will have this as the running flat. And then we're going to go up. This is definitely consolidate. Can this consolidate into a more complex pattern before they go? Yes, but as long as they do this, we're going to go up, right? At least one impulse, one correction, one more up. So what is the correction doing? Looks like it's setting up for a downside. I think you want to watch this short term. Short term look like we might be making an attempt at the low here. Retest this low before you go. Right, that is a possibility. If they don't go that far, which means if you get this trade, but it just comes somewhere like here and start to go back up, you get out for break even, but then you get the buy trade. Right? Because if they stop here, then that becomes a flag for upside. You get the buy trade. See? So which one it's going to do? Not important. This could be the low. You see they broke out of the structure and they came around. In a running flat, that could be the low, but I don't think that's the low. I think they'll still get one more here before you go. So we'll be having something like this, most likely. So go back to there. We had something like that already. We got this bigger flat here. We came down. We might go down one more, and then we're going to look for upside. If they start to go from here, you'll get the trade somewhere there to the upside. They don't have to break this low because we broke the top. But if you're in the sell and they come and they break the low for an expanding flat, that's okay. Right? So that would be a good one. So let's go. We can look at gold and silver, and then we'll take Q&A. We'll do some questions. I'll tell you about the webinar, and then we'll do some questions. The course, and then we'll do some questions. So silver, we're still kind of going down, still in the corrective structure. I don't see them going down very much to the downside, but you know, if it, like I said, if that's a contracting flat, that is possible. We have seen those contracting flats in this one, especially. We've had those contracting flats in here. Look, we had one right in here. We had this one, contracting flats, and then they drop. So we have had this contracting flat, and then they drop. Let me remove these. Right. We've had this big contracting flat here, 1, 2, 3, and then they drop. So I wouldn't be surprised if this turns out to be a contracting flat here. This one, 1, 2, 3, and this one decide to go down and break, right? So if it goes down, you all know you should have an entry order somewhere around 15, 14, 90. I think somewhere there we're looking for an entry order to buy. If they break out of this structure here, now that's a buy, right? So if this breaks out right now here, you're buying that. We're looking for upside, right? If they do come down and break the low, somewhere, I think 14 something, 1490, that's your trade to the upside, right? So this would just probably come a little more down if it comes out. There's a possibility it could break out, depending on whether we look at that as a contracting flat, which we have had a lot of contracting flats in this pattern already. So watch for that. Silver, you want to buy, you don't want to sell. You want to look for the buy setup on silver. Whether it comes down or not, you either buy in the breakout or you buy in the drop. But you're looking to buy on silver because of where the biggest structure is, right? And again, it's very easy. You have an impulse, you're going to get a correction, and you're going to follow another impulse, right? You have an impulse, you're getting a correction, you're going to follow by another impulse. You can look at it like that. You can look at it as an impulse. You got a correction, you got another impulse, right? So the logical thing is you're going to watch this go back up, maybe retesting this stop even. I think this stop they'll retest, but that one is unlikely. So you would probably be doing this, coming here, and then you can look for this trade. That's a good trade if you get it, right? That'd be a very nice trade. Gold, I don't think they're going to tag this low. Like I said, I still think this is probably making some kind of a running flat come back here before they go down, right? Making this into a bigger correction in the middle there, which is possible. We've had a lot of those big corrections. And we've got like this one, we've got bigger ones in there, you've got this, there's smaller ones within this. So this could be like 1, 2, 3, tag the top and then come back, right? Now, if it is going to go down from here, which you probably don't want to sell it here, you want to wait for it to do this. You can see the amount of pullback they had, Wait for a pullback like this. And then look for this one now. Right? This one had a pretty huge pullback here too. 1, 2, 3. Right, so you get these huge pullback in them. So I think this one, you probably wait for that pullback even further. Let's go to the 4 hour. 1 hour. So 1 hour, you're getting your final. Remember, if in the webinar we showed this final 1, 2, 3, 4, 5. So this might be a contracting flat there, and this is probably coming down for the final one. Watch it at this level for your buy setup. Right? You don't want to short it where it is right now. Right? So watch this very, very carefully here. If it's over here, if it's finished there, then you're going to be looking for this to stop here and then break out. So the short, you have to wait for you to get a flag here to stop, because they can stop right here and start going up, and that would be a very, very good one. Big picture upside, look for the buy setup. The short-term sell setup shouldn't be important. Right? Questions? Any questions? S&P 500, somebody wanted it. Let me do it very fast. You can prepare your questions by the time. Get your questions going. Watch for S&P 500 to turn. You see they made a break there now. Watch for this to turn. The big picture is this. See? This one is easy, right? They're kind of like, you see this one here, and you're going to make one more here. Probably go back up and then come down, right? So you got 1, 2. You got 1, 2, and then come back here before they go. This is like a big long-term consolidation, but more downside. So at the top there, you want to look for sell setups. I don't think they have a sell setup right now. It's looking like one more buy to the top. They might break the top. They don't have to, but could break the top. So you got this one more buy maybe. This is looking more like a flag. One more up there, and then look for the sell setup. Right? Say this is something not everybody trades, so we're not coming to do all the charts here. We just have to stick to this. So let's go. Let's get the questions coming in now. Are all MACD histograms the same, including yes? Let's see which one has more questions. I answered that. How many hours do you watch the charts on a daily basis? An average of 10, 12 hours. I still do that on a daily basis. Right? More questions. Here's the thing. If you want to be a successful trader, you got to practice. Today only I did a one-on-one with one of my traders who is making profit, but is having some difficulties in clicking the trades and actually taking trades. So one of the things I tell him to do is I explain to him why that is happening and how we could actually solve that problem. So for a month or two, he'll be working on that, and then we'll see where it goes from there. So any chance to look at Platinum, we'll look at it after. Let's finish the Q&A and let's finish the course, and then we'll look at it for sure. Could you look at Aussie? We will look at all this. Guys, let's look at all the charts later on. If we start looking at charts, it will become just another webinar. I thought you guys are coming with questions and the majors, like, you see something else, you want to learn about it. Right? So, okay, if there is no questions there, by the time you guys are getting ready your questions, I'll take 2 minutes and tell you about the course that is coming up, because there is a lot of questions on Facebook also about the course. Tell you about that, and let's take the Q&A still. You get to ask your questions, and we can look at a couple more charts and go, right? So, we have a course coming up in September. It might be either the first week or the second week in September. So everybody asks me, what is your group, right? So this is how we are structured, so you can know. We have a Slack. Well, let me see. We have a Slack that looks like an SL, a Slack group where all my traders are. If any one of you used Slack before, you know how Slack is structured. You get different channels for different purposes in there. So we have a channel for webinars, we have a channel for chat, we have a channel for different charts, we have a channel for information, we have a channel for records, right? Recordings that are posted. So you get all your information in the group. And then on where we have like webinars, where webinars or links are, is you get access to webinars. We have a trading room. It works 24 hours. It's never closed. So you get access to that room. You can go in whenever you're free, and there are traders in there, and they discuss trade setup. It's not, let me just make sure clear to everybody, it is not a signal service room. We don't run our trading room as a signal service room. We don't give you signals. In there are traders who are trained to trade, are independent traders. Every single one is an independent trader. So they actually know how to trade. They're just discussing among themselves trade setups that they see. So somebody see a trade setup on the euro yen, he's going to come into the room and say, hey guys, I'm looking at the euro yen, I saw this, let's look at it. They will all look at it and decide whether they like it or not, right? So you can do that. That's one. The second thing you would have is every single day, 8 a.m. London time, I do a webinar. So every day I do an update of the chart. An in-depth update, which is we look at charts, we look at patterns, we look at all this thing, we do them in details, we identify what we think it's going to do. And then we said, look for this trade or look for that trade, right? Basically. And then the traders get into the trading room and they do exactly that, start looking for those trade setups. 2 or 3 times a day, if there's a high impact news coming out, I would join the trading room to make sure we're doing it the right way. Make sure those traders are not taking higher risk than they should. And I get in the room and we trade during that period of time with me in the room. I don't, anytime there's a high impact news, I try to get in. So 2 or 3 times a day, you're going to get there. We have about 10, 12 or more traders who are literally opening the room and, helping you while you're in there. So if there's no trade setup going on, but you have a question, you can ask there and you'll get somebody to answer you. Besides that, we have the course. The course is 5 weeks. It goes like this. 1 week, I do webinars. That is classes. We teach you everything. I show you how it's done. 1 week, you go for practice. You practice exactly what I showed you. So you get into a small group, right? I'll talk about that just now, Victor. You get into a small group of about 10, 12, maximum 15, sometimes 5 people in the group. And you get to practice with one of my senior traders. We have about 10 traders or more, and we can add more trainers to the team, right? Who will be guiding you and helping you to correct the mistakes you're making. You get 1 week of classes again after that. These are on different topics. And then you get 2 weeks of practice, same way. The practice session, you get to choose the time. The practice session covers 24 hours. So every 2 hours within a 24-hour time span, you have a practice session going on. You choose one of those sessions that suits you. So in terms of practicing, you don't have to worry. It's work anytime you're free, you can get a session. You have to choose one session when you're free every day for that training session, right? Because each group has a certain amount of people. You can't just jump into any one. You will be in one group with 5 or 6 people, and you get to practice at that time every day. I think you can find 2 hours a day when you're absolutely free. In 24 hours, there's 2 hours that you're absolutely free, right? I think that's possible. So we haven't had a problem with that. The class itself is 6 a.m. New York time, but if you miss the class, you get a recording. So if you miss one class, it's not a problem. You get a recording, you can watch it. All classes are followed with QA. All the practice are actually Q&A. And then during classes, after you finish this practice, so you finish this course, the next course you do practice with me. You train for a couple of months, and then when we do the next class, you get to do practice sessions with me. I arrange what I call the marathon. Marathon goes like this: from 8 a.m. to 8 p.m. We have every half an hour, we have somebody presenting a chart and doing a practice session. You open, you're the presenter, and I just look what you do and I correct what you're doing if you need help. You can do the same thing every day in the trading room. We will have about 2 or 3 breaks here, 1 break for lunch and 2 breaks for snacks. So basically, it's a non-stop process. See? And we keep you in the room. You're in this room, you have access to the room for a lifetime. As long as you keep learning and people are learning and they're doubling and tripling their accounts and they're still in the room and they help others. Which means if you're new in the room, you just finished the course, you need more help than you're getting, you go to one of the senior traders. You can put in the room, guys, I will have an hour free, I need some help. Somebody, you're gonna get more than 1 people to help you. Because you know there are a lot of successful people in the group. If we start charging them money to stay here, they'll go away, right? So we don't charge them money. We would like to have those successful traders stick around and help those who are struggling. See? So that's a good thing that they're around there. They'll help you. Basically, that is how we structure it. And beside that, you get a lot of question and answer. And every week I will do 1 or 2 Q&A when I'll jump in the room and if you have questions, you can come and we'll answer them. So it's a non-stop learning process. I think you like the room, right? It looks like a room when I'm finished. Right? It looks like a big room, basically. So once you're in here for life. Hopefully that you become a very successful trader and you help a lot of people become successful, right? That's all you need to know. So if you want to take the course, just send me a Skype message, right? You can always find me in Skype. Let me type this big because we always have a problem, people sending me on Facebook and everywhere. And I keep telling them, send me a Skype message. So I'll type my Skype very big. So those who are watching the recording of this, they will be able to see it, right? So it's going to be something MANGAL 457. Send me a Skype message and I will immediately answer you, right? Yes, if you don't do good in the course as well, it's not like you don't do good. If you're struggling, which means if you're still not understanding the courses, you can do two things. You can either ask one of the senior traders to help you. If you just finished the course, most likely you will get help from a senior trader. If you still think you're not grabbing the concept, then I would take you in a Q&A. I do one-on-one with traders who are already trading live and actually not doing well in their trading. So what do we tell our traders? If you are 20% drawdown on your account, stop trading and call us. Right? I would take that trader and even sometimes 5-10%. If you think you're not grabbing the concept, you come back. So I would take you and I will go through all your trades that you have done one by one. Where you take the trade, what was the reason, what were you looking at, what was your analysis, what was your risk management, how did you manage it, what did you do during that whole process? And then I will get you to, because each trader is individual. Each trader makes different mistakes. So I will individually set you on a program what to do. So I'll give you a concrete program. Either you, like some traders, I have to stop from trading, let them trade less. Some traders, I have to put more trading. Trade less percentage, but more. I want you to click more trades because there are cases where traders they don't have the confidence to click the trade. Well, they're not that they're overtrading, they're fear of losing. If you're afraid of losing, then we put you on a lower percentage. Go 0.5%, go 0.2% if you have to. But I want you to click 100 trades within a 2 week. So I want you to take 100 trades, win or loss, I don't care. I want you to have the psychology of clicking trades, just making trades, make the darn trade and trade, right? Because you can't be a trader if you don't have if you're fearful of clicking trades. And then there are traders who make 200 trades a week and they don't really make profit. And then they come and I said, okay, you got to ease up in that trading. I'm going to put you on a limit. This is what you're going to do. You're going to go to the 1 hour and you're going to do this, and then, come back to me. They all have to come back to me after a month to tell me how they do. So every trader is different. You have traders who pretty much they're doing very, very good in their analysis, but they don't trade. They just break the rules in money management. They break the rules in entry. They break everything that you can possible, and then they end up with the wrong trade, right? All kinds of different traders. Yeah, Alexander, I saw you send me a message, which is great, right? You can see traders, and these Alexander, I don't think is even in my room, right? So you can see traders, they make a lot of money, right? Even just watching the weekly webinars. So if you're in the room, you're supposed to be really doing good. But everybody has different level, everybody has different experience. Like I said, success is an individual thing, right? You ever watch football? We have different level of footballers. It doesn't matter if you have the same trainer, right? You put the same trainer to train two different teams, and you're going to have different levels of people playing, right? Even within the same team, you have different level, right? So it's that thing, right? Success is how much the knowledge you have. You have to have the right knowledge and the right training, and how much you apply it and how much you do it. But the good thing is in our group, we will stay with you until you make success. We're not leaving you, right? We will stay with you until you become successful, right? And we hope that is very, very fast because we want you to help somebody else. So, any more questions? Let's go. Let's get the questions coming. Let me see. I may have missed some questions. Let me scroll up to the top and get those questions. For the meaning US weakness across the board, giving us possible. We will look at each pair individual, but yes, if dollar is moving, then all pairs will move. What is next? The question: money. What money do you need to start with? Okay, that's a question that a lot of traders give. Here's the deal, guys. It's not about how much money you need to start with. It's about how much money do you need? What do you need from trading? Why are you doing trading in the first place, right? So if you need a car, let's think of this. If you need a car, if you say I want to buy a car, right? Like most of you, if you're young, you want a car, right? The question when you want the car is not just what type of car you're going to buy, right? It's how much money do you have for the car, right? Because you may be dreaming of a Ferrari, but you only have $5,000 in your pocket. And that means you're not getting a Ferrari no matter what you do, right? It's the same thing. Trading is like any business. It's like you want to buy something and sell something. You're going to do business. You're going to open a restaurant business. You're going to open a, I don't know, you're going to start up some shop. You're going to, whatever it is, any business. You have to start registering company. You have expenses, right? And if you don't have the capital, you may as well not start it. It's the same thing. This business has a very high risk. So if the more capital you have, of course, is the better it is for you, right? But if you just have a few $1,000s, let's say you have $5,000, I don't think you should pay $2,500 for a course and then trade in $2,500. That doesn't make sense. I think you shouldn't be trading in the first place. If $5,000 is all the money you have, then maybe you start demo trading until you really, really think you can be successful before you start trading live. Because you're likely going to lose your $5,000 even if you take a course. Because you take the course is not a magic. The course you will take a couple of months before you start making money. And then you join my group. You see people start posting, guys, I'm 4 months now and I have doubled my account, or 6 months and I doubled it. This month I made 20%. And you're thinking, oh, well, probably I could just join them and make 20%. And you start trading live without, we allowing you to do that. You haven't even completed the course. You start trading live. If you don't have experience, you could lose all your money. If you have a lot of experience, we have a trader like that who came in. He has a lot of experience. Within the first month, he made 30% or something like that, if I can remember clearly. But he has the experience already. He just joined because he wants to have that extra edge, which he's getting already without even completing the course. But he did look at all the recordings, so he has some knowledge about what we are doing, right? But after training and all of that, I wouldn't be surprised if in a couple of months, like 6 months' time, he's doubling his account. That's pretty normal, right? That could happen. And it's not that they're over-risking. It's just that they're seeing the charts much more clearer than you could see it before, right? Their trading has become much more effective. So how much you need to trade, that's a relative term. Depends how much you want. But I would advise at least have about $10,000 free money lying in a corner that you can trade with, because you really don't want to trade with your last couple cents that you have. It doesn't make sense. Right? I'm not opening a restaurant because I know restaurants have very high cost if you open a good restaurant, right? So I don't want to run that business because it's just going to eat up the money I have. And then the next thing you know, I don't know if I'm going to get profit in it. Same thing like this. Anything you plan to do, you have to have a plan, right? What do I want from it? Do I just want a couple $100? I told one, I said, I can make $100 with the money I have. I can make $100 every month. I said, go get a job. If $100 is all you want, go get a job, because then if you can make $100, you will make much more doing a job. You make probably a couple of $100. It depends where you are. But then you wouldn't have a risk. You're not risking your salary. You will get that couple of $100 if you go to work every day. If you trade every day, it's not a guarantee you will make that $100 you're looking to make, right? So it's that thing that you have to be careful of in terms of amount of money you want, right? What risk you recommend taking each trade? I don't recommend a specific risk because it depends on each individual trade. So I would take different risks on different trade. If I see a long-term trade and I think I want to hold on to that trade for a long term, and I know it's probably going to go a little drawdown on me, I may risk 5% in that single trade. If I see a short-term trade I want to take and I'm not quite sure it's going to go right now, but I would like it to go right now, I may just risk 1% on that trade. So if I lose it, I lose the 1%. But if you want the formula way of doing it, right, which is you're saying I want a concrete formula how to work with it, I think it doesn't have to be that way. Most people like to sell it that way, and it might make sense. I think of it this way: risk the money you're not afraid to lose. Put it that way, right? So that's how I would say you can risk as much as you're not afraid to lose. So let's say you want to be a trader for a year and you have $10,000 and you decide that, hey, if I lose $5,000 of that, I will definitely stop trading. I'm not going to be trading anymore because my wife is going to kill me if I lose half of that money, right? It means you take 5,000 as the amount you're going to risk, divided by the amount of losing trade you can make in one row. Like you can get 10 losing trades in a row. Then you probably divide that by 20, not by 10, because you don't want to lose it in 10 trades. You divide it by 20, and that is the amount you can risk in every trade. So at any one time, you can lose half of what you plan to lose. So half of the 5,000, which means if you get that string of row of very, very bad trades, like you get 10 bad trades, if that's the max your strategy is giving you, well, you will lose 2,005. So you still have 2,005 more that you can trade with. By then, I guess you will be making a winning trade, because if you're not making any winning trade, you may just stop trading, right? Even if you're guessing your way, you're going to make a winning trade every now and then. So, I mean, you understand, right? So if you have a good strategy that is proving that it's a winning strategy, then you don't have to worry about that. Right? So once you organize that, then you don't have to worry. But then here's the thing. Sometimes it doesn't even matter if you say 1%. If you're trading a $50,000 account, let's say first time you're going to trade, or you're just starting trader, you probably have some experience, but you were trading minis or micros and you were successful, and then you suddenly got a $50,000 account to trade, and you put one standard on and it starts going against you. Said, okay, I'm going to put my 50 pip stop as normal. That's the way the stop should be. So you put 50 pip stop, but then you watch it start coming back and it's at 40 pips, and you put one standard on, and you're looking at that and you're thinking, oh my God, that's a lot of money, right? That is a lot of money. What if you go take me out? I will lose the whole 500. No, I don't like this. I'll probably click it off. And because of the volume of money that you're not used to, you will click those trades off crazily. You will be surprised if they draw down sometime I win. I think one day I'm going to show you guys it and tell you, but I'm not afraid of it. Not because it took me a while to get there. It took me a very long time trading $1,000 or $10,000. Well, I didn't trade small accounts very much. I trade one 1,000 and one 10,000. That's it. And then I went immediately trading 100,000, which I doubled, and now I'm trading 500,000, which I hope to double very soon. And then a next one would be the million, right? That's the next step. When you do that, then you go trade $1 million. But you have to get there step by step, right? Yeah, there's a webinar there for risk management. You can look at it. So, like I said, it's trading is a very individual thing. What is not individual in trading is knowledge. Knowledge is not. You have to have that good knowledge of the market. You have to have the good analysis. You have to be able to do forecasts. That is not individual. We all have to do the same forecast, right? I know traders would say, hey, I don't do forecasts. I just watch for this. And, when this happened, or I see this pin bar and this happened, and I put, well, that's not a strategy to trading, right? Because trading is forecasting, right? You're literally making a forecast on every single trade you take. You say, let's go sell the pound now. Let's say half of you in here say, let's sell the pound. Why are you selling the pound? Because you think pound is going to go down more, right? And then the other half in the group said, no, let's buy the pound from where it is right now. And why they're thinking of buying the pound? Because they're thinking their forecast is from at this point, pound is going to go up, right? That's a forecast. That's your bias. You're making a forecast and you're trading your bias. When you decide to make that, it creates a bias in you, right? You forecast it for upside, you got a bias, your upside bias. And then you start trading that bias. So the problem is, when you're making those forecasts, what are you using to make the forecast? You're using pin bars to make forecasts, you're likely going to lose your account. You're using support and resistance to make the forecast, you're likely going to lose your account. You're using animals to make the forecast, you're definitely going to lose your account, right? So what are you using to make the forecast? Because none of those are forecasting tools, right? There is only one forecasting tools in the market, right? There's only one. And if you master that, you don't just have to say, well, okay, I'm using Elliott wave, that's me, I can do it, or I'm using wave analysis. You have to master it, right? We can all kick a ball. We are not all footballers, right? Doesn't mean we can't kick a ball. Of course, if you put it in front of me, I'll probably kick it. If you put me in front of the goal, I'll probably miss 90% of the time, right? So not all of us are footballers. You have to practice and be trained to do that good. Then you become a successful trader. Right? That's the whole point. You become successful after. So you have to find a tool that allows you to forecast. And wave analysis is the only one that gives you that forecasting tool, right? That allows you to make money. You have a brokerage account statement, London. Yes, I do, but I can't show you now. London social media market. Did you turn 1,000 into 100,000? No, I didn't. When you were getting started, I haven't turned 1,000 to 100,000. I've turned 100,000. I've doubled 100,000, and I'm working at 500,000. I don't know who turned 1,000 to 100,000. That's, well, either they're very good at trading or accident. It could be. If you were selling the Swiss when it was falling, well, you could do that. What is the social media? When you getting started? Getting started on what? You mean when I started trading? That's about 5 years ago in my entire learning about trading about 5 years ago. I knew nothing about 5 years ago in trading, if you want to put that. I think you should not vary your risk per trade too much. like I said, that's an individual thing. I'm doing it pretty successful. It's an individual thing. You have to be able. You have to. Why I do that is I look at the setups in the trade. So if this is a very, very good setup based on my experience, I will risk extra on that one. If the setup itself is not a very clear one, it's a good setup, but not 100, not one that I've seen that does play out more often than the other. I have less confidence in that. Not, I wouldn't say confident, but the varies of this will not go very far. So I'll risk less on it. Most likely, that varies. Oh, if there are traders in the group, that definitely. That's absolutely so. There are traders in my group who trade better than me. Let's put it that way. We have traders who have tripled their account from the start of the month, from the start of the year. From the start of the year, I haven't tripled my account. I haven't even doubled it as yet. So there are better traders in there than me? Absolutely. In terms of trading, yes. In terms of the volume of money they're trading, I don't think so. I don't know anyone in my group. I think I have traders in my group who are trading big account, but they haven't doubled their account either too. It's a different strategy, depends on the sum of money you're trading. Right? And then what I was doing with this account, we were testing a few strategies that kept us for months and months not taking trades. We were just in trades that we weren't doing anything with it. Just leave them long term to see. One of them was the pound. Let me show you this pound chart. We actually kept this, and we specifically kept it. We made a conscious decision to keep the pound sells that we had. Let me show you the 4 hour. It just took away a lot of months from us, but we made a conscious decision. So we were selling pound here. I had the first sell of the pound was here. We had a second sell here, and we had to sell somewhere when this broke. This one, when it broke, they would tag us in the trader. So we had like 3 sells there, 15 standard lots. We could have taken them off anywhere in here when they started, but we could have taken them when we saw this going up, right? But what we did is we consciously kept it, because what we said is we went to the daily chart and we said, okay, here is the deal. We see this pattern here, and we think this was going to go down. This didn't go down. Now, if we were right about our analysis, this might tag the top, and then at some point, this has to come back, right? So if we're going to convince our investors, which is we're looking for bigger investors, if we're going to convince them that we know what this stuff does, right? So I'm coming to you, you have a couple $1 million, and I'm telling you, giving me $1 million to trade because I'm pretty good at this. And he says, well, why you're good? I said, well, here is the deal. Even when I'm wrong about a trade that I took here was a good trade, but I'm pretty sure that it should go down. And let's say I'm wrong and it went up. I have the possibility to take it out for break even. And not only did I take it for break even, we made money, right? So he would have to see that I have done it before, that I can do that. You have to see that if I'm using wave analysis, that it actually works and I have the confidence that it works. Not something you should do, right? None of my traders were told to do that. They shouldn't have done that because we made a conscious decision to do that. We literally decided we were going to keep it. We were in profit. The account was in profit. This was just eating up some of the profit, right? Right? So it's recorded. You can see all of them. So we literally kept it and watch it come back here and then take out the trades. See? That is the point. So if somebody coming to you that you're going to invest in a lot of money, you want to see that kind of confidence, that the person knows. He doesn't only just say it, but he literally has done it because of the confidence. I've been telling all of you all the time during the webinars that this is going to come back. It's not going to go up like that. And now if it makes a consolidation here, anywhere here, that is going here. We're going to sell back again. We're going back right back into the sells again. But now, long-term trading, I want to see a long-term consolidation. I want to see something like this for this leg. This is the leg we'll be selling from the top here if we get it. So in here, it's a bad idea. In here, it's good to take off the trades, show you can do that, and you can take bad trades back to positive and then show you can. Like I said, I'm trading for a different purpose. We're trading this account to sell it to investors. So it's not about if we can double it a year. We don't even want to double it a year because we might not be able to do that performance consistently for them, right? Hopefully, I can double it by October or so, right? That's going to be a year, 3 months. We were close to doing it, but then we went into that drawdown and then into another drawdown, which we are keeping specifically for those purposes. One more thing I can tell you that you should never do. I don't use stops. On that account, I'm not using any stops. You should not do that. None of my traders are advised to do that. You should never do that because you're not doing what I'm doing. You're not, the purpose of that account is different. It's an investment type account. It's not just for spot trading, short-term trading like you guys do. You shouldn't do it. If I'm trading a small account, I wouldn't do what I'm doing here. Right? I would never put those trades on without stops. Right? So, like I said, depends on what you're doing. We are making very conscious decision of trades that we are in. Right? I'm looking at the pattern. Sometimes we see what is happening and we make conscious decision in those patterns. Because we have a specific agenda what we are doing, right? So you have to trade differently. We train you to trade differently. So yes, there are good traders in my group. Absolutely much better than I am doing, right? You could be one of the top traders in my group if you come in. Any one of you can be. You have the ability, take the chance. Any more questions? Let's go. My winning ratio, my win-loss ratio is amazing, but that doesn't say anything about the account. I'll tell you why it's amazing. So when I'm trading, like I said, we don't take a lot of losses in the account. We even allow it to go in drawdown and then come back. And if the trade structure is changing, I close them for break even, right? So let's say I'm in a trade right now. Let me just show you something random. So let's decide that, oh, I sell the pound right here, right? Random, I sell the pound because I think it's going down. And then the pound starts to go back up, right? It starts to go back up. And I'm looking at that trade and, you know, it's not going to go back up straight. They might make a pullback like this, or they might come back, retest the low, and then go. Either of those two structures that I see will change, would either give me a small profit or might give me a small loss here or break even. Most time it's break even. The way the plays, the spots that I'm, you know, buying and selling, if I'm wrong, you could get a break even pretty easy. Like, for example, I would never sell the pound here, but I'll take a buy here. So I would decide I'm buying the pound here, and then it drops like this. I just have to wait for it to do this and then take break even and then sell it back there. Right? Basically what I did here, we sold here, it went up, came back, took out for break even, we're looking for buys. Or sell if they get a flag. See what I'm saying, right? So the win-loss ratio is good, but that doesn't say anything about the account. That's not what we're looking at. Percentage, we were up, I think, maximum about 70%, 70 something. We're at 60 something now percent. So it's good, right? I think 65, 66, 60 something. I haven't checked it. No, I don't do all of that. Like I said, this account is for investors. I don't have time to waste to go look at all those statistics. And like I said, each trade is even different. Each trade does not have the, you know, I'm not writing statistics down and I'm not making a journal and which trade I lost and this is done a little different. Don't try to follow what I'm doing. This is a little different. We have a different agenda on this account, right? I'll show you guys sometime. As soon as I double it, I'll show you. But there's a different agenda for that account. The account agenda for that account is to sell to investors, big investors, not small investors, right? So we have to show them certain things that we do that has nothing to do with a journal or every trade you take or how much, you know, pips you make in every trade and all that. Those are very small things. Those are not important in that case. If I use, I think you're asking if I use stochastics tool, if that is what you're asking. No, I don't. I don't use Bollinger Band. I don't use anything. How you see my chart here is how I trade. What you see, and the only thing you would see on the chart that you even is this. I don't put anything on the charts. Nothing. It's a waste of time. If you're putting too many things on your chart, you don't know what you're doing. It's that simple. Why are you putting all of those stuff on? To give you some confidence, right? To help you, to give you an edge in the market because you have no idea what you're doing. And putting them on does not help you. It just makes you more confusing. I told you about the one guy I saw, right? So he has all these moving averages like, and then he had another one, and then he have another one, and then he has another one. And, you know, every now and then the chart will bounce off one of them. And he will go on YouTube, he'll go on Facebook and YouTube, and he'll do this webinar. And you see how this respect this moving average. Look, it came to the moving average and it bounced off. It's funny, of course. You can listen to it and say, hey, look, you put on moving average, put anyone. Just give me anyone you want to put. I'll show you how much time it's going to bounce off of it to go up or bounce off of it to go down. You know, it's like you can use anyone. It's just crazy, right? But he sells that stuff, right? He sells that stuff very much. Actually, the guy was interviewed once by BBC, right? And he sells that thing very much. Like, hey, look how it's respecting the 200 period moving averages or 200-day moving averages, or it's you respecting this 50. I'm like, you have any idea what you're talking about? It's respecting nothing, not trend lines, not moving averages. It's not respecting anything on your chart. You can put whatever you want on it. It has nothing to do with what the chart will do, right? It has absolutely nothing to do with that. So you can put a lot of things and say, hey, look how it hit this one and bounced off, or look how it is, and you see how it's respecting my trend line, or you see how it's not respecting anything. It's just that crazy idea that you can sell. When people say that, they have very little understanding of what the chart is doing. When you look at a webinar and somebody is telling you it's gonna bounce off this moving average and all of that stuff, that is an amateur. He's just learning because he has no idea that that's not how the charts work. It's not bouncing off anything. Like I remember how many times I told you guys, these trend lines are useless in terms of what the chart will do. We put the trend lines to show us patterns, right? We just put them there to show us what pattern we think it's making now, and then we decide whether it is making that pattern or not. We were wrong about the pattern, it broke the structure, break out of the structure, right? Is it still making the pattern we're looking for? Then great. It's just a guidance to tell us whether we're still in the same pattern or not. It has nothing to do with anything. It's not bouncing off those lines. And it's never going to bounce off any line you put on the chart, right? So next time you hear somebody say that crazy stuff, leave the webinar because you have nothing to learn there. And if the more they put on the chart, the less they understand what the chart is doing. You don't need any of those stuff to learn, right? The chart will move. It will continue to do. You don't need to look at the pin bars also. That is useless. The more useless stuff you have in your chart, the less successful you would be. You need to be able to understand what the chart is doing. What are they doing right now? And I can repeat this 100 times, but I think, I don't know, 101 times will not affect you. It's not making a pattern. I think people think that, oh, these guys think charts make ABC pattern. No, charts don't make patterns. That's not the purpose. They're not sitting there saying, the investors, nobody's sitting there saying, let's go make a pattern. They're trading. They're doing their regular thing. Think of it. They're just regular trading, right? So everybody's trading. Somebody's buying, somebody's selling, somebody's buying, somebody's selling. More people buy, more people sell. Then they all buy and sell. The buy and sells are equal. Then some more people buy, then some more people sell. There are more sellers. There are more buyers in the market. That's what happened, right? And then at some point, you got a big buy order and the market took off, right? So let's say the market was coming from there and you got a big buy order at this point here and the market took off because there weren't anybody selling, but the big buy order coming. What we are saying to you, and what Elliott Wave was saying to you, is that during all this buy and sell that was happening here, the market makes patterns. You can look at that and you can find a specific pattern that will tell you that the market is going to go up. That's what is happening. We're not looking for ABCs in the chart. We're saying that this, what happens here, is telling us that this is going to go up. That is it. It's not like the market sitting trying to make an ABC or a WXYZ for you. It's not doing that. You have to read what it's doing. It's not you deciding what it's going to do. You're reading what it's doing, what the market is doing. It's a hindsight thing. You read and then you make your forecast. So the market has to do a certain amount of things before you can read. Like I said, this is one piece. If I'm going to take a long-term sell, the market has to do something like this. And unless it does something like that, I'm not selling this long-term. So I have to see that the market is preparing itself for a very strong fall. As it's already fell, we saw that falling coming, right? We saw that coming, we sold it, we got out of the market. I got out of the market because I realized I see this. And when I see this, the market normally is either go back up very strong or make a big correction. And because I know that is likely going to happen, I exit the trades. Not because of some moving average, not because of a support and resistance, not because of anything, because of what I see, the patterns that have been created. And I've seen those patterns before. 80-90% of them goes back up. So I can show you one of this on this same chart. So I'll go in this very chart and show you one of that. So here, you're going up. You see the market is going up very strong. And then the market starts to die out. Look at what it does. See, it starts to make those short impulse correction, short impulse correction, short impulse correction, short impulse, and then look what happens. See, you don't have to look far. Every time the market starts doing that when it's going in one direction, you start thinking, oh, there may be an exit coming here. So I can take a copy of this. I'll take a copy of the whole move so you can see, right? Just bring it across here. And we'll flip it now. We have to flip it. No, not flip. We have to mirror. Let's mirror it. And then flip it back. Take off the flip. Yep, take off the flip. Just mirror. And I'll squeeze this because this is a bigger version, right? That's a bigger version. I'll squeeze it to fit this version. Anybody see something, you know? That's magic. That is the magic you need to learn in here. And when you see it over and over and over, you remember what it did when it was there? You remember what it did? This was going up, and then it fell. This is coming down. What is the likelihood of this happening now? That's it. That is what we do here. We don't do magic. We look at the chart. We study the charts. We teach you how to study it correctly. That's what we do here. It's not we're looking for ABCs and WXY and, hey, it's making a flat or it's making it. We name those patterns so that you will remember them. We give them names so that you can remember them. You can remember specific names. That's why we give them names. Right? That's why Elliot named them so that he wouldn't get lost in it himself. Right? See? Look how easy this is done. Now, the question is, can you repeat that? What I did just now. How many of you can do that right now? Pick any chart and show me a pattern and then go show me in that very same chart where that pattern is. Well done. If you can do that, you know the trade, right? If you can do that, you can trade. If you can't, and if you want to learn to do that, that's what we teach you to do. Right? That's what we teach you to do. See? We teach you how to recognize these patterns, how to recognize them correctly, because there are a lot of places in that chart you will see something like that that goes the opposite direction. You may be looking at the wrong one, right? So if you think you want to learn, if you think you want to be with a good group of traders, you know what to do. Send me a Skype and we'll go from there. So what you're looking at, Euro, New Zealand, oh, that is for the patterns. What else? A few months back on 1 hour. There's the 1 hour one there, numerous. You don't have to talk about Fuji back. You could go just a few days back and find a 1 hour pattern that repeats itself. The 1 hour patterns just keep repeating themselves over and over. So you could go just a couple days. Eric, you already have scheduled what month for the earlier next year's course? Because no, I haven't done that. I haven't even scheduled the next course. I have no idea where that is going to be. Even this course, we don't know the date yet. I think it's going to be the second week in September. That's about it. Basically, I don't work. This is the training course is not the basics. It's not the main thing I do, right? So we do them randomly. They don't have any specific schedule. Normally it's 2 or 3, maybe 4 maximum a year. That's all. Because remember, it's 6 weeks and then we give you time to learn and all of that. So it's not like we don't do this as a business every day. You come, let's sell more course to more people. That's not the point. We even filter people from coming in. You have to have at least a year experience. You have to have capital, because otherwise that you're wasting our time. You know, if you don't have all these things, it's wasting your time and wasting our time. And as you can see, my traders are making money, so we don't want to waste their time. We want to make sure they're using it very good. So maybe, I don't know, maybe December, maybe January. In January, definitely not. If it's not December, it's going to be February, right? If it's not in late November, December, it's going to be till in February. Because January, we don't do courses. January, everybody's on holiday. Right? Okay, guys, more questions. Let's get more questions about trading. I like those questions you guys are asking. They allow me to explain to you what you need to do, what you need to learn in this stuff. Any more? Okay, looks like everybody is well aware of how pattern works. If you're in a drawdown, do you still trade with the account while with? Oh, I have so much profit I can trade. I never get into, well, rarely, I think once or twice I was in a drawdown when the account itself was in drawdown, which means below the capital, the original, the capital of the account. I think only once or twice that happened when we were in a lot of trades and when the pound was going up, going up, going up. That time, I think we were slightly below the capital, but most of the time we were in profit. So even I'm right now in trades that are in drawdown, but I still have my equity. Let me just check it out to you. Yes, my available margin is in profit, right? The available margin that I have after I've taken trade is in profit. So that's not a problem for me. That's not an issue. Right? Once you get the profit, that's not an issue anymore. So you can still trade. I still trade. I'm still looking for some nice trades, actually. I'm looking for a buy in the pump, put it that way. So you guys don't worry much what I'm looking for. I'm looking for a buy in the pump. I'm just waiting for it to give me that setup for a buy. We don't have a buy setup yet, right? I'm not buying just like that, right? I'm not waiting for the setup. Is there any sign of contracting flat? Signs, you mean how signs how to recognize contracting flats? No, there isn't. No, there isn't any. You just have to look at the pattern on a different time frame, and then you can make an assumption that that's one. Very likely you can see it if you watch the charts often, and like we don't even make assumptions of contracting flat. If you get a trade, if it's within a 4 hour, you trade it. If it's within a daily, you trade it. If it's within a 1 hour, leave it alone. And if you have a contracting flat in a 1 hour, just leave it alone. Because you might likely be on the wrong side of the trade if you try to trade it. Right? So that's the next thing traders should know. If you see a number of trades, let's say like we use 30-something charts, right? So let's say there are 10 possible trade setups, but 4 of them are not so good, then you go trade the 6 that are good, right? Or 6 of them not so, they're not, it's probably a contracting flat, probably not a contracting flat. It's a expanding flat and you don't want to take the risk on it. So you can go trade those that have the better setups, the higher probability trade. We call it trading the higher probability trade. It doesn't make a difference which ones you trade, as long as you have a higher probability, right? Okay. So you see 10, you like 4 of them, they're better to go, you go trade on those 4. That's easy, right? That's the easy way. That is why we have a trading room, so the traders can go in there, they can look at all the trade setups they have, and they can make that decision. And then you get the decision which one to trade. We have traders who trade, only 1 or 2 currencies or 1 or 2 instruments, right? We have people who trade only gold, for example. Yes, I trade multiple time frames. Most of my traders do that. We trade multiple time frames. Cadian, what's on the Cadian? Amir, what is it on the Cadian? We're looking for more questions rather than what's on the Cadian itself. A trade setup, then take it immediately. New Zealand completely flat, right? Yeah, the upside still looks possible. So let's look at New Zealand since we've already looked at it. Let's look at New Zealand, see if you have a trade set up there. Yeah, well, now you see they haven't broken the low, so you can go with this now. And you have a trade setup coming now. Now you have confidence in what you're doing. So they just give us a complete pattern, right? They give us an impulse. They give us 1, 1, 2, 3. You got that. You got 1, 2, 3. That's a regular flat in there. And now you can look for any trade setup to buy this. At least back to this top. Wait for the setup here. Wait for the buy setup. What is a buy setup in that one? Well, what was the buy setup in this one? See, when they made that move, they made a flag here. When they made well, that was the first move there, but you got a flag here and a flag there. There's a very small flag here, if you notice it, right? That's a small flag, and they're probably 15 minutes. Not something you should do very often if you don't have experience, but you can see it. You got a nice 15-minute flag here. You got another flag there, and you want to trade. So wait for a flag here. Take that trade. So you got another flag here for this trade up, sideways, go. Right? Wait for it. You jump in the trade now, and then they do that. And you're like, what happened to this wave analysis thing? I thought he said it's going to go up, right? So wait for the trade setup, wait for it to prove. By putting a line here doesn't mean it's going to go up. We're just making an assumption that this wave is complete, and this is the pattern we're looking at. Now, what if that wave is not completed? This little move up does not mean that that wave is completed. It means you have to wait for the buy setup until you get it. What if you don't get it and it comes here? Well, then don't worry. It's not your trade. If it's not there, it's not your trade. You don't have to chase everything because you will catch the wrong ones. You're very likely going to catch the wrong ones. You want to catch the right ones that have the best setup for you. Then you put your money at risk. So, okay, guys, we have been here for more than an hour and a half. So I think that's enough. Everybody is pretty tired. And the YouTube one is still running. This is a very long one for people to watch on YouTube. Can you use the MACD lines? What you mean use the MACD lines? I have no idea what you mean by that question. We use the histograms. So you mean those two lines that are there? It doesn't make a difference what you use. Depends what you're using it for. Right? We're using the histograms. It's giving us, we're using it for divergence. That's not a secret. It just shows you divergence basically. Right? So when you see divergence, you're thinking it's not a sign, it's not a trading thing. We don't trade divergence. We just look at divergence for momentum. That's all. So, okay, guys, I want to thank you for coming. I don't know how many people were in the YouTube one, but I guess we must have had some people there. So if you guys could help share this video, would be good. There are many people out there struggling to trade. They don't know. There are even people, one guy wrote me from TradingView the other day, about 2 days ago. He said, oh, finally I found you. I was like, what's wrong with you? It took you about 2 years actually to find me, right? So finally he found me, which is a long time, 2 years. I don't know what took him so long, right? He's still in TradingView, hoping I'll go. There are still people writing in TradingView asking me, why you're not posting charts now, right? So I'm still worried why they can't find me until now, right? So I hope that, yes, John, thank you for that. I hope that was the whole purpose, help you answer some of your questions that you have. I hope I answered most of your questions and most of you are satisfied. Please help share the video. Take care. Thank you for coming, guys. Thank you. Bye-bye. Let me stop the live.